Okay, guys, good morning. Today is the 8th of July 2014. Alpha Trading Strategies, and boy, do we have a good one for you today. You are looking at a order about to go in to sell some call options on Amazon. Now, remember, to sell some put options. Now, remember, we just sold some. Call options about 3 days ago, and those options essentially now are effectively, they're going to be worthless. We sold the 342s, 342 and 345s, and they are, and price right now, as you see here for Amazon, is at 322. So price has fallen. We're going to pull the chart up in a moment. So what we want to look at is we're going to get this order in here, and as you see here, this is the order as it sets up. So it's telling us that our maximum profit in premium is $3,100. Our maximum loss is $9,400, which tells us that we've got a 30% return on this. 30% return on this particular trade. That can occur in 3 days. Absolutely phenomenal. Okay, so let's give this a second here. Let's pull up the chart. Okay, so here is the premium on the call option, and as you see here, the premium right now has just skyrocketed. Now this particular option only has 3 days of time value remaining, and look at how much they've marked it up. So what we're looking to do is we're looking to combine our understanding of the sequence of the reversal pattern and how the 12 bar types actually identify that, and at that point we want to be a seller of that premium to the dumb public, because the public essentially is buying stock to go long, and they're essentially buying options looking for the lottery ticket. And you know what? Sometimes it does happen. Sometimes the price does, as you see here. I mean, look at this option. This option went from 50 cents to almost $3, almost a 6% return. But we would rather take the steady quarter than the possible dollar. And that's what Warren Buffett does. So the present time right now, if you look up here, you'll see the present time is about 8 o'clock, 7-8, and this is Amazon that we're looking at, and presently at 322.13. And remember, we sold the 342, 340, 342 and a half, 345s, and we collected about $4,500 in premium on that, and that's essentially just going to expire worthless. So we're going to give this a moment here, and we'll be right back. Let's go to the futures. With crude oil, really nothing's taking place right now. It's just sort of bouncing all over the place. So there has been no trade because the sequence has not occurred. And so once you understand these bar types and you understand the sequence, it keeps you out of making bad trades, because the same behavior that they utilize in order to reverse price has to occur, and we know exactly what to look for. So let's start from the beginning. There are the average trader out there does not know how to read a chart. They are buying strength, they are selling weakness, they are scalping, they are making numerous trades on a daily basis. The average trader does not know that he is or she is a chicken that's about to be a broiler. And professional money has numerous advantages over the public. Number one is that they can see all the orders in the marketplace as granted to them, their fiduciary responsibility as granted to them by the exchange. But at the same time, what the public doesn't know is that they are able to trade for themselves using that same information. So this is an inherent, integral conflict of interest that exists in the markets as we know it today. They are able to use that information in order to position themselves and their choice clients. And they have their own brokerage firms. They don't go through Charles Schwab, and thus they're able to operate in this manner. These are your specialists. These are your direct market makers. These are your syndicate groups. These are your floor traders. They're all down there working together. But the public believes that because they have been hired by the exchange, that they are there for the public. Nothing could be farther from the truth. So that's their first advantage. Number two is that they have incredible amounts of capital, okay, that they can throw into these markets. Okay? And three is they are able to control the market as they see fit. And if you want any further evidence, just look on a FOMC day when they were waiting for the federal minutes to come out in regards to interest rate policies, things of that sort. The market just goes sideways. That's them. They can hold it. They can hold it right there. I mean, really hold it. Okay? So there are three components that we utilize when we are looking at the market. One is price, which means that at certain price levels they are going to want to take action, whether it be to buy, whether it be to sell. Two is what we call spread or alpha, and that is three components of each bar, and that is the high, the low, and the close, irrespective of color. And third is the volume that is contained within each bar. Once you memorize those 12 bar types, then there is a sequence of a pattern in regards to these bar types and a volume pattern which indicates that professional money has not only bought, but they are now prepared to advance price after they have in fact bought. Once we do that, we do not believe that it is in our best interest to look at the futures or the stock. So while we can trade crude oil, it has limitations. One is that it's directionally based only. Your profit is based only on where you get in, and that's it. You have to contend with stop losses and where do you place them. And those are three very, very, very big problems. Okay, so we would rather turn our attention to the options, because at this particular moment when we get a sequence, the options are overpriced, as we're looking here at Amazon. Let's go here. Okay, so here we see here the option, the put option. This is the Amazon. It should come up here. This is the Amazon Weekly's 320 put. The 320 put right now is at $2.75, and so we're going to pause this here for a moment where there's still nothing yet, and we'll be back. Okay, so here we are. We've got at 28.50 is our, let's just see if we can, it's going to be a little bit better than that, but we're looking at about a 30% return on this. So we're going to go ahead and take this. We're selling 50 of the 317, 315. So anything above 317 and a half, we are a happy camper with 3 days to go. And we were just filled. We sold 50 of the weeklies. Alright, we're going to pause this for a while. Let's take a look at price. And that's that option there. Right now it's at $2.50. We'll mark it there, and this thing should collapse over the next couple of days. We'll pause this and we'll be right back. Okay, we've got Amazon lifting. So the sequence was working out. And you see here the price of Amazon is is now at 322, 323, and so another sequence. You're seeing this live. Let's take a look at a call option that we sold on 7/3 on Friday. We sold it right around here, 7/3, right around 7 o'clock. So it's right around the 246 level, something like that. Option right now, 29 cents. All of that premium we've collected in our account. We'll pause it, we'll be right back. Okay, so you see here we sold those 50 verticals, and they deposited 2,900 into our account. Let's take a look and see what the price of the put options that we have sold, how they're responding. Okay, this is the 317.5, 317p put, Amazon 100 weeklies, and we sold it right up around here at, let's say, 193. It's already dropped to 158. So that's at least a 20% fall in that. So that's going to do it for today, guys. As you see, Amazon is rising, and if you'd like to know more, of course, you can go to our site. Alpha, I told you it was going to be a biggie. alphatstrategies.com. Listen, guys, this is not rocket science. It isn't. All you have to do is to understand that the nature of this game, it's not the way that they publicize it, and that we want to do exactly the opposite of what the public is doing. All right, enjoy the day. Thanks for watching.